How to grow a small trading account effectively. In this video, I'll explain step by step how you can grow your small trading account. I will be covering three things. Number one is trading edge, number two is the risk of ruin, and number three is the thing that makes the difference. Stick till the end because that's where the juice is, that's where you will get the most from this video, and that's where the most important part is. So just pay attention and let's get started. By the way, are you enjoying my videos? And subscribe so you don't miss anything. Alright, so the first thing I wanted to cover is trading edge. And if you've been watching my channel for a while, you know that trading edge is something I talk about all the time, and it's something that's really important. You can only grow a small trading account if you have a verified strategy with an edge over time. That's what you need. If you don't have that yet, that's what you need to be working on, because otherwise you will just be gambling and hoping that your small account will grow. So step one is really building a verified trading edge. And you can do that by building a strategy, testing it over the past 5 to 10 years to see how it performed, building a trading edge, and from there on you can go to the next step to build your small account. Now, in order to build a small account, you need to know your edge inside out. And what I mean by that is that you need to know the maximum drawdown, the losing streaks, the win rate, the average R, the average return, etc, etc. These are all things that you need to know. And the reason being is that when you are growing a small account, essentially what you want to be doing is scaling up your risk on the best setups. And before you can do that, you need to be able to understand the drawdowns. Let's say you're going to risk, I don't know, 5% a trade, and your maximum drawdown in your backtesting was 25R. That means that at some point you will be blowing your account. Now, 25R drawdown is quite big, but it can definitely happen for certain strategies that have lower win rates. So all I'm trying to say is that you need to know your strategy inside out, maximum drawdown, etc. Now, the next thing is the risk of ruin. And I've talked about this before on this channel, but the risk of ruin is basically the probability of you blowing up your account at a certain amount of risk per position. So let's take a look at this.
Right, so the risk of ruin, probably you've seen this before on my channel, but I want to dive into it again because it lines up with what I'm talking about in this video. So the payoff ratio is your average risk to reward ratio, and that's why I said in the beginning, be very clear about your edge and know your edge inside out, because you need to know these numbers. So let's say your average R is 1.5, which means you risk 1 to make 1.5. Let's say your strike rate, so your win rate is 60%, and you want to be risking 5% a trade. You can see that there's a small, like a very small risk of ruin. If you risk 4% a trade, it's 0. This means that if you're risking 4% per position, there's 0 probability of blowing up if these numbers stay the same and if there isn't a black swan event or something like that. So this is like, you can find out the maximum. So let's see, 4.5, you can still do that. 4.6, you get this. So basically the maximum with this particular strategy is 4.5% risk per trade. Now, I always tell people go below that. Why? These numbers aren't static. So there will be periods where your win rate will go down. And if you're risking too much, you can blow up during those periods. Also, you need to leave room for error. So you will always be making mistakes or miss a trade or whatever the case may be. But these numbers will go down eventually. So always be below there. So let's, for example, say the maximum 4% a trade. Now, this is the maximum you can risk per trade. Ask yourself, are you comfortable with this? If you're trading with a big account size, like you don't want to be risking 4% because the drawdowns can be quite huge. But in terms of building a small account, more risk is the best thing to do. The next point that I'm going to talk about will be allocating risk. So to give you a quick preview, the maximum we have is 4%. So what you can do is, for example, risk 3.5% on normal setups and 4.5% on grade A setups. Again, let's dive into that a bit deeper.
Alright, so you know what the risk of ruin is, and now the next step is the last one, and that's to really allocate risk in an effective way. So you have a strategy with Edge, you know the maximum amount you can risk per trade, but now you really want to dive deep into this question. When is your strategy performing best? Which context improves the probabilities of a winning trade? And again, this shouldn't be guesswork. This should be something that you've seen play out over time, again and again and again. And you're going to define your grade A setup. So you have your normal strategy, just your normal setups that you take and you take and you take and that provide you with an edge. But there will also be certain occasions when there will be things lining up and the probabilities increase. And you want to be very clear on when that's the case. And when that's the case, you want to be risking more. Because let's say normally your strike rate is 50%, and then when certain things line up in a certain context, it goes to 70%. Doesn't make sense to be risking the same on those trades. So be clear on what the grade A setup is for you. Scale up size on these grade A setups. They shouldn't come along very often, but when they do, you really have to push it. And those are basically the things that you need to do to grow a small account. So again, number one, clear plan with a clear trading edge. If you don't have a clear trading edge, start there first before you start trading with your live money. Step two is calculate your risk of ruin. Know how much you can risk maximally before blowing up. Are you comfortable with that? Yes or no? Know your edge inside out, know your maximum drawdown, etc, etc, etc. And then really focus on, okay, when is my edge working best? And then scale up during those periods. And then that's basically how you grow a smaller account. So there are some things that you can do when you're like, let's say you have a big account, you want to be more conservative with this. So you want to be more conservative with your risk. But if you're growing just a small account, the best way to do is just high risk on grade A setups, bit less risk on the normal setups, and then compounding while staying within your risk of ruin. That's the best way to grow your small account. Hopefully you learned something from this video. If you have questions, comment down below. Also, by the way, below this video you can find a link to a training I made specifically designed for people that want to trade for a living. I explain step by step how to go from losing trader to consistently profitable trader. Link is in the description. Thanks for watching. See you next time.